All right, welcome, legends. Today, we're pulling back the curtain on the secret playbook that the whales, the big dogs of crypto, use to absolutely crush their gains. This is the strategy that helps you get in sync with the market's rhythm so you can spot opportunities that most people completely miss. Let's dive right in.
So you've seen this happen, right? Bitcoin's price is just kind of chopping sideways, not doing much, and then bam, some random altcoin you've barely heard of just explodes. And you're sitting there thinking, how on earth do they know? How are they always in the right place at the right time? Well, that's the exact strategy we're breaking down today.
Look, it all boils down to one powerful, yet surprisingly simple concept. It's not magic, it's not luck, it is a repeatable strategy. And once you get it, I promise you, the entire crypto market is going to start making a whole lot more sense. This is the why behind those insane gains you see. And that strategy? It's called Altcoin Rotation. The best way to think about it is like a financial dance. It's the art of gracefully moving your capital from Bitcoin into Ethereum and then fanning out into the hot altcoins, all perfectly timed with the market cycle. This is how smart money doesn't just ride the wave, they're kind of making the wave themselves. Okay, so you might be asking, why bother? Why not just hodl Bitcoin? And hey, that's a fair question. But while Bitcoin is the king, the absolute bedrock of this market, the really explosive, life-changing gains, they often happen in the altcoin space. We're talking about potential 10x, 50x, or even bigger returns, while Bitcoin's just catching its breath. And the key, the master key to unlocking all of this, is watching one single metric: Bitcoin dominance. But hang on a sec. Before you go ape into the first shiny altcoin you see, you have to remember this. This is a powerful strategy, for sure, but it's not without risk. It is absolutely crucial that you start small. Use an amount of capital you are totally okay with losing. The goal here is to learn the flow, to feel the rhythm of these rotations without putting your main portfolio on the line. You gotta learn the dance steps before you hit the main stage, you know? Okay, so that's the why. Now for the question that really matters. When? Because in crypto, as you know, timing is everything. To nail this strategy, you have to understand the bigger picture, the market cycle itself. Let's break down the 4 distinct phases of the market. Look, every market, and I mean every market, moves in this same predictable 4-phase cycle. It's like clockwork. First, you have accumulation. This is right after a big crash, when everyone's terrified, prices are in the gutter, and the smart money is quietly buying up everything. Then comes the markup. That's the epic bull run we all love, and it's almost always led by Bitcoin. After the top, we hit distribution, where the early birds start selling to the latecomers. And finally, markdown. Hello, bear market. And that brings us to the scary part, right? The bear market. This is when the fear is off the charts and you hear everyone screaming that crypto is dead again. But for us, for the smart money, this isn't the end. This is the biggest sale of the cycle. This is your buying opportunity of the decade. You have to see the markdown not as an end, but as the beginning of the next great accumulation. And here's the best part. You don't have to guess what phase we're in. You can just use a tool like TradingView. Set up some alerts, throw on a few key indicators, and watch for the technical signs that a shift is happening. It's all about letting the data do the heavy lifting for you. All right, let's recap. We know why we're doing this, and we know when to start looking for the signs. Now, for the main event, the how. This is the step-by-step actionable playbook for actually executing these rotations. Let's get into the nitty-gritty. Okay, the number one most important metric for this entire playbook is Bitcoin dominance. All this measures is Bitcoin's slice of the total crypto market pie. During a bear market, a crypto winter, you'll usually see this number hanging out above 60%. And why is that? It's simple. When people are scared, they flee from risky altcoins and run to the safety of good old Bitcoin. Basically, high dominance means the market is scared. Think of it like this. When dominance is high, over 60%, everyone's hiding out in the Bitcoin bunker. That's your signal to be patient, just hold your position. But the second you see that number start to drop, especially when it breaks below 50%, boom, that's the starting gun. That is your alt season alert. It means money is feeling brave again, flowing out of BTC and hunting for those bigger gains in ETH and other alts. That's when you get ready to rotate. And don't worry, tracking this is super easy. You can pull up a live Bitcoin dominance chart on sites like CoinMarketCap or right in TradingView. If you want to get really nerdy with on-chain data, you can use tools like Glassnode. Seriously, this chart needs to become your new best friend. Check it every day. And if you need proof of how powerful this is,
Just look at what happened in 2021. The year started with BTC dominance at a massive 70%. By the middle of the year, it had absolutely plummeted down to 40%. So where did all that money go? It flooded into altcoins, triggering a legendary alt season where tons of projects went 50x or even more. History doesn't always repeat, but man, it sure does rhyme.
So here's the rule. It's super simple. During the bear market and the early parts of the bull run, you let Bitcoin do its thing. Let it lead the parade. But the second you see its dominance hit a clear peak and start to roll over, that's your signal. That is your cue to get the rotation playbook ready to go. Okay, but if you really want to get ahead of the curve, you need to put on your detective hat. You can use on-chain tools like Nansen or Dune to literally watch whale wallets and see where the big money is moving in real time. Keep an eye out for weird volume spikes in small-cap coins. Watch for rising gas fees on Ethereum, which signals more DeFi action, and even track what people are talking about with tools like Santiment. This is how you get a real edge. You just got to remember this simple truth. The biggest wins aren't found when a coin is already trending everywhere on social media. They're found by the people who see where the capital is flowing before it's obvious to everyone else. Being early is everything. It's the difference between a 10x and a 100x. All right, this is it, the moment of truth. Bitcoin dominance is falling, you're seeing the early signals, it's go time. The first classic move is rotating from Bitcoin into Ethereum. Step 1, when BTC looks like it's topping out, you sell a chunk of it into a stablecoin like USDT. Lock in those profits. Step 2, pull up a ETH/BTC chart. This chart shows you how strong ETH is relative to Bitcoin. You're looking for a good spot to get in, ideally on a dip. Step 3, pull the trigger. Use those stablecoins to buy your ETH.
But wait a minute. Why ETH? Why are we going to Ethereum first? Why not just jump straight into some crazy, low-cap gem that could go 1000x?
Simple, because Ethereum is the king. It's the grand central station of the altcoin universe. It's the undisputed leader for smart contracts, it's the foundation for pretty much all of DeFi, and it's the main trading highway for thousands of other altcoins. Before money flows deep into the riskier parts of the market, it almost always makes a stop in ETH first. And when it comes to actually making the trade, don't overcomplicate it. Use a big, liquid exchange like Binance or Coinbase for fast, easy swaps. And pro tip, use limit orders. That way, you can set your entry price ahead of time and automatically buy those dips we talked about. And the payoff? Well, let's just say the data speaks for itself. Ethereum has historically outperformed Bitcoin in every single major alt season. Every single one. And that wraps up the first half of our Playbook, legends. Do not go anywhere, because part 2 is coming up next, and that's where we break down how to take those ETH gains and rotate into the high-flying alts for those massive returns. You don't want to miss it. Let's keep moving. All right, legends, welcome back for part 2. If you thought part 1 was the warm-up, well, get ready, because we're about to hit the main event. It's time to go from knowing the game to absolutely dominating it. Let's get right into the advanced stuff. Okay, let's do this. Part 1 was all about understanding the board. Part 2? This is where we learn the winning moves. We're getting past the theory and straight into execution. This is how you start to move like the whales, how you see the market not just for what it is, but for what it's about to be. So here's the absolute #1 secret you gotta understand. In crypto, money follows the story. It chases the narrative. If you can figure out what that next big story is before everyone else does, you are putting yourself in a position to catch some truly insane gains. Now, check this out, because once you see it, you can't unsee it. So what's hot right now? You've got AI, real-world assets, and the whole Layer 2 battle. And how do you spot them? You just have to be plugged in. We're talking CoinDesk, X, wherever the crypto world is buzzing. So let's say you see the AI story catching fire. Your brain should immediately go, okay, who are the players? You look at stuff like Fetch.ai or SingularityNet. But the real key, it's all about the timing. You want to get in when you hear the first whispers, and you get out when your friends who know nothing about crypto start asking you about it. That's what we call peak FOMO. It's not random, it's a predictable cycle. Look, having the right idea is only half the battle. You absolutely need the right tools to act on it, and you got to be fast and safe. You can't be messing around with some slow exchange or worse, getting your wallet drained while a huge opportunity just flies by. It's time to build your on-chain fortress. Let's get tactical. First up, speed. You need a DEX, something like Uniswap, so you can swap tokens in a flash with no middleman. Second, security. Your crypto is only as safe as your wallet, period. MetaMask is awesome for day-to-day stuff, but a hardware wallet, like a Ledger, that's the king.
It keeps your keys totally offline, which means your computer could literally explode and your crypto would still be safe. And third, just basic defense, people. Put 2FA on everything and stop reusing wallet addresses. Keep it clean, keep it secure.
And here are a few more pro tips for you. Need to jump between blockchains, like from Ethereum over to Arbitrum? Use a bridge, like Hot Protocol. Okay, now listen up, because this is probably the most important thing I'll say. Phishing sites. They're everywhere. They look exactly like the real thing, and they exist for one reason: to drain your wallet. You must always double-check the URL before you connect anything. And a little pro gas tip for you: do your big swaps when the network is quiet. Think late at night. You can literally save a ton of money on fees. Okay, so you've got the strategy, you've got the tools. What's left? Well, the final and honestly the most important piece of the entire puzzle is you. It's your mindset. The market is basically a machine that's designed to take money from emotional people. We're just not going to let that happen, right?
Real talk for a second. Just look at this and be totally honest with yourself. Are you doing any of these things? Because spotting the mistake is the first and biggest step to fixing it for good and actually locking in those future profits.
And this right here, this is the difference between an amateur and a pro. Amateurs, they FOMO into a coin when it's already pumping. A pro, they look at the RSI, which is basically just a tool that shows if something is overbought, and they wait for things to cool down. Amateurs get totally wrecked by bad news they didn't see coming. Pros have news alerts set up so that's the first to know. And amateurs go all in or sell everything at once. Pros, they ease into positions and they ease out of them. It is a completely different way of thinking.
You need a profit-taking plan before you're up 10x and your heart is pounding out of your chest. Here's a super simple framework you can use. Your coin doubles, sell 20%. Bam, you've got your initial investment back. It hits a 5x, sell another 30%. Now you're literally playing with house money and you've banked serious profit. Then you protect what's left with the trailing stop loss. And the ultimate emotional hack? Journal your trades. Seriously, write down why you bought, why you sold. It turns every single trade, win or lose, into a priceless lesson.
All right, let's look to the horizon for a minute, because this game is always changing. The big stories of today are not going to be the big stories of tomorrow. Being early means looking ahead, not just at what's right in front of your face. So let's talk pure alpha. First, real-world assets, RWA. This is about putting stuff like real estate on the blockchain. We're talking trillions of dollars in potential value. Next, AI agents. Think of these like little autonomous bots, like what Ocean Protocol is building, that can trade and operate on-chain all by themselves. That's the next frontier. The Layer 2 wars between projects like Optimism and Arbitrum are getting intense. The winners there are going to be massive. And don't forget your safety net. When things get crazy, a stable coin like USDC is your best friend. And finally, looking way out, quantum computing. It's a real threat to today's crypto. Projects working on quantum resistance, yeah, you want to have those on your long-term radar.
Man, we covered a ton of ground today, but we are just getting warmed up. In our next explainer, we are diving deep into risk management mastery. We're going to show you how to set stop losses to protect your gains, how to size your positions like a true pro, and how to turn those super risky trades into calculated moonshots. Make sure you hit that bell so you do not miss it.
And as always, remember, none of this is financial advice. This is all just for your education and, a bit of entertainment. Always do your own research. Now let's go to the moon together.